Good morning, everyone, and welcome to the TriggerCharts Friday morning pre-market rundown. I'm your host, Kevin Hoffman. I'm a co-founder of TriggerCharts with Andrew Horowitz, and I'll be leading this discussion today. As always, if you have any symbols you'd like us to take a look at, please feel free to put those into the chat box. Just want to make sure everybody can hear me okay. And okay, great. Before we get started, important disclosure, investing involves substantial risk. Past performance is not a guarantee of future results, and a loss of original capital may occur. Please consider this for educational use only, and as always, use your best judgment when investing. All right, guys, we have a lot to get through today. Quite a few symbols I want to take a look at with you guys and just kind of show you what we're looking at in the marketplace. A lot of volatility over the last couple of weeks with the presidential debates going on, as well as stimulus talks. So let's get right into it. As previously discussed, we're going to be looking at some of the stimulus talks that are moving markets, the presidential update. I'll take a quick look at the COVID talk and some stocks that we're looking at. Inflation, going to be a big theme coming up in the next year or so. We believe there's this big discussion over breaking up big tech as well. But let's get right to it. Stimulus talks seem to be moving this market rather substantially. Yesterday, the conversation seemed to be around airlines and whether or not they wanted to do a piecemeal deal to save these airlines and get a deal done. However, it seems like Democrats are not interested in this kind of a piecemeal deal, and they want to get a full package done completely. Haven't seen any updates yet this morning. If anybody's seen anything, feel free to post it in the chat, and we'll send it over to the group. The only thing I did see, however, was that the White House was looking to speak with Pelosi sometime later in the week next week. As you all know, nobody seems to be getting any more stimulus checks, so the further this draws out, the harder hit people will be taking, whether it be mortgage payments, rent payments, utilities, retail sales, etc. So really need to get something going there. But looking at some of these positions as far as airlines go. However, I just want to step back quick before we get into some of these individual positions and just take a look at overall markets. Let's take a look at the SPY. We're going to take a look at long-term charts. As you can see here on the SPY, we're at the top end of the range here on this altimeter. We're going to probably break above this line of resistance on the daily. Same thing on the weekly today. It's a matter of whether it's going to hold or not. Not a whole lot of volume at price above here. So in this instance, many of you know this, but above this altimeter here, we don't really want to be short. You can take some short positions, but it's not advisable above this altimeter level. Another thing to look at here, let's remove this radar here, is we kind of have this inverted head and shoulders pattern. I'm not sure if you guys see this or not, but let me see if I can draw a line here of this head and shoulders pattern. You have one shoulder here, here's your head, and then here's your other shoulder, which could result in a market moving much higher and moving back to the all-time highs. Obviously, there's going to be some constraints as far as how far the market can go with the upcoming election on November 3rd, as well as stimulus talks. But if that should resolve, then it seems like the next move would be moving higher. Russell 2000 has been extremely strong over the past couple of weeks. May want to watch this going forward, but previously, Russell 2000 small caps has been lagging extremely. So this could be a breakout for these small caps moving higher. I'd watch for some resistance up here in this 166 all the way up to the all-time highs, but also have some resistance starting here in this previous consolidation zone that you saw back in early 2020. You can see it even better on this weekly chart here, where you had this consolidation over a few weeks. Let's see, it's about 8-10 weeks or so. So going to be a lot of volume to try and get through there. You'll see this radar here where you have a really big high volume node there. But let's get moving on to some of these stocks that we're taking a look at and go from there. Airlines seem to be the focus lately. Jets is your ETF here. Let's shorten this up here. But got a pretty large consolidation area, good support down below here. So going to be a wide range, though, depending on the stimulus talks. But all systems seem to be pointing to a move higher as long as stimulus can get pushed through. On your altimeter here, it looks like we're getting a buy signal coming up with fairly limited upside potential here, since you have a lot of volume at price. So really got to move up through here pretty substantially in order to get a decent move higher, but going to be constrained for the moment. Jets includes lots of different airlines, including Delta, United, Southwest. So a lot of these positions, just take a look at, keep an eye on. American Airlines, really a big consolidation pattern here. This might be one that's worth watching, at least for a breakout to either the upside or the downside. As we've talked about in the past, you get this kind of rubber band that gets stretched further and further and further. It's bound to snap one way or another. So if we were to break above around this 1430, have a little bit of resistance up to 1520 or so, and then also to the downside, certainly some support at 1120. Some traders have had some really good success trading in between these altimeter ranges, which, as you can see, there's some decent range here. If you buy down at the $12 level, selling up at the $14 level, taking a $2 price, getting anywhere between 15 and 20% on your money. Pretty decent option there. As far as a presidential update, it was announced yesterday that Trump's not planning to attend the virtual debate, but looking to hold a rally instead. It's all going to depend on whether he can test negatively on his COVID test. But it seems like he's in good spirits and ready to get back to work. It seems like the agreement for the next debate will be on October 22nd, and then also postpone the next one to October 29th. This is originally what the Biden campaign had pushed forward, and it looks like the Trump campaign has agreed to that going forward. So it'll be an interesting debate, considering the last one was quite the war, let's put it that way. It was almost like watching the WWE, World Wrestling Entertainment. But it's really interesting. Betting odds from PredictIt, they're showing that the odds are in favor of Biden winning the election at 65% versus Trump at 35%. However, can't ever count Trump out. As you saw last time in the election, polls were pushing toward Hillary, but Trump, squeezed that out. So for all those people that want Trump or Biden, whatever side of the aisle you're on, just make sure and exercise your right to vote. That's all we'd like to say about that. Vice presidential debate was this week. Focus seemed to be on COVID management as well as Green New Deal and taxes. Now, this Green New Deal is interesting because it could potentially bring some outcomes in for solar companies. A lot of this seems to be baked in already. So if we do happen to see a Biden win, we would see potentially some of these solar companies revert back to the mean. So I'll show you what we're looking at here. But companies like SolarEdge, this is a really great breakout here. If you guys were subscribed to the Commander series, you see this long that you got here on September 25th, where you had the breakout and the confirmation, and then this large move up from about 200 all the way up to 314. That's a 114-point move. Extremely powerful move, very quick, and as you see, it moved through price. So starting to get some overbought signals here on the aileron, but certainly not a lot of price at volume up here, as this is all-time highs. So watch for this one to move rather rapidly. But again, if Biden were to lose on November 3rd, we would suspect that some of these solar companies would be in trouble. We'll take a look at First Solar as well. This is an interesting one, coming up on some resistance here at the highs, around 82 or so. Sunrun, another one. This is more of a residential play on solar. Taking a little bit back here on the daily, but again, we're at the bottom range of this altimeter. Look for there to be some support there. You can take a look at the radar and see, but not a lot of prices. We talk about holes. This is what we're talking about here, where you have this section where there is very little volume at price. So therefore, you're going to see a lot of movement in price here, a lot of volatility potentially coming down. So you may see some support dropping down here at this 57 level, and resistance obviously at this 77.50 level. Wait for that to resolve itself. Another good solar company here is ENPH Technology, or ENPH Energy. They do a lot of solar management tech, whether it be storage or generation or management of that solar. Moving on, let's talk a little bit about COVID. After Trump was hospitalized, he seems to be on track to push Eli Lilly's antibody therapy or antibody treatment forward on a fast track. So you see this jump up here in price on the daily here for Eli Lilly. This is actually a pretty decent chart here, because if we get a breakout above this $155 level, that should be a good opportunity to buy up and watch it move up here, as we have a pretty decent hole in between 155 up to about 163 or so. So watch for that one, especially if they are to get this antibody treatment approved and move forward for COVID. Additionally, Trump received some treatment and therapy from Regeneron, which also was talked about yesterday as far as fast-tracking this particular therapy so that people could get a little bit better health care. This all stems on the fact that Trump can fast-track that, but we'll see how that moves forward. Another topic that we're looking at here is the future of theaters. We did see last week, or actually yesterday, was it yesterday? No, 2 days ago, Cineworld, which is a UK-based company, decided that they were going to suspend operations for all of its UK and US operations. Now, Cineworld does own Regal Theaters here in the US. They have approximately 500 or so, 536 or so theaters here in the US, and Cineworld has 127 theaters over in the UK. It's been a tough business to be in. Margins were already pretty thin as far as movie ticket sales go. A lot of their money was made on snack sales, whether it be popcorn, sodas, and whatnot. But this is really going to be a difficult future for these theaters. And we can take a look at AMC and Cinemark here in the U.S. One of the things that AMC wrote out, let's see here. One of the things that AMC struck a deal with Universal, I want to say midweek this week, where they were going to release a lot of their new movies into the theaters, but then 17 days later allow them to the streaming services. So this would give AMC and Cinemark, just AMC, a potential opportunity to make a little bit of money back. However, still going to be a difficult road ahead, because a lot of the blockbuster films, whether it be Bond or Anything else that may be coming out? I think Dune was also suspended until next year or so. So a lot of these blockbuster films, it's like new car sales. If there's no new cars available, nothing really to sell. No blockbusters, nothing really to sell. So AMC's been struggling here. We can see this on the weekly, just basically a straight down. Even before COVID times, you see that was a struggling position, just based on some of these margins and, less and less people going to theaters, more and more people, happy to stream from the comfort of their home on their couch with their 65 or 80-inch TV. So this will be an interesting one to watch. I just don't know if there's more downside here. It would seem so, considering the lack of revenue that they're receiving. But again, do have some support here at this $4 level, but the long-term trend is down, so we'd be careful with any particular long positions in these theater companies. We can take a look at Cinemark, probably very similar looking chart, as you'll see this large drop in March here that we had when COVID was at the forefront and never really recovered. We are in a weekly consolidation mode here, very, very wide consolidation area. I would be taking a look if it should move back up to this higher end of this second altimeter, one back, or even this first altimeter here as a potential sell opportunity. It is currently in a sell bias right now. You've had 2 weekly bars where it's dropped from this $11 level all the way down to $8.35. This was confirmed also back here on the daily chart as well. That's one thing that we like to have people look at is multiple time frames in making their buy and sell decisions, as these multiple time frames can help you skew the probability in your favor. And also you see this aileron switch, which was a good, really, really good signal here after it dropped below that first altimeter. Had a change of the guard here on the aileron down to a negative level, and then also the continued move lower here. Pretty good trade there for Cinemark. Now, additionally, moving forward, some of these streaming platforms may end up catching a lot of the revenue that these movie companies previously had, like Disney. Even though Disney's a big conglomerate, they're hurting on ESPN, obviously. They're hurting on their parks, but their streaming service seems to be doing quite well. So not really a pure play as far as streaming goes, but something to keep an eye on. Again, big wide area here on this altimeter, which indicates a lot of volatility. So a lot of times when you get these altimeter levels that are really wide, these are kind of areas that you want to look to buy on the low end, sell on the high end, but just know that there's going to be a lot of volatility here because there's not a lot of volume at price. Again, if you guys do have any stocks you'd like us to take a look at, I know I'm kind of going through this pretty quick, but there were quite a few stocks that I wanted to take a look at today. Still have a few more to go. Let's continue on this streaming thing. Obviously, yesterday, not sure if everybody saw this or not, but FUBO came out with a $10 IPO price. Now, a lot of you will be asking why, if they IPO'd yesterday, is there so much trading already available? Well, FUBO's been trading on the over-the-counter market for quite some time, but they've recently switched over, so now you have all this data back here to watch. Now, FUBO, if you're not familiar, their focus will be on the sports niche. Probably not the best time to be IPOing with, well, maybe we'll see, but the sports are starting to come back with college football, NFL, a little bit of baseball, but certainly struggling considering that a lot of these football games, especially at least in the NFL, have been suspended or moved forward, like we've seen with Tennessee having a lot of issues with players testing positive for COVID. Now, if you haven't seen this, Ron DeSantis down here in Florida has authorized stadiums to open up completely with no capacity restrictions. So you may see Florida State games, University of Florida, as well as the Dolphins or Tampa Bay Buccaneers moving towards increasing capacities. However, I know that Florida, at least, and the Dolphins have continued at least to leave their restrictions on to, I think it's either 1/4 or 1/3 capacity. But they do have that ability to increase should they want to. But FUBO, this sports niche ought to be interesting. Hasn't really been anybody in the marketplace that's focused on sports streaming. So I think that the packages start around $65. So for those people who enjoy sports, this would be a good one for them to take a look at. Netflix, also a great streaming play. You'll see this ever since COVID, it took a slight dip, but adding a lot of subscribers here. Content is going to be the overriding factor here, as many people haven't been able to film or create new content due to some of the restrictions that are going on across the country. Let's see if we can move forward here. What do we have next? So one of the things about theaters that we've seen, as well as any other indoor spaces, is this increased cleaning and filtration and HVAC that's been going on. So several of the companies that we're looking at do some interesting filtration techniques. This would include companies like Philips, Whirlpool, Honeywell, Unilever, as well as 3M. But Philips, probably one of the bigger ones. Philips and Honeywell, I think, are the two that are focusing on some of this HEPA technology. Philips is a foreign stock, so you don't get a whole lot of volume here on the U.S. trading. But let's take a look at Honeywell. This is an interesting chart, starting to get more toward the all-time highs here. But as these indoor facilities start to ramp up their filtration, we see these as a potential company. We see these as potential companies that would benefit from this. Daily chart, obviously, we're breakout here on Honeywell. So this would be something that we'd stick on the long side, at least for the time being. Unilever, they have both on the cleanup side as well as some filtration, but obviously seeing good amount of high-end moves here and staying higher. Could have a lot of support on the downside. Whirlpool, another one, another great breakout here. If you guys are a TriggerCharts Commander Series subscriber, excellent breakout here from the 180 level all the way up to 200. We'll see that continue moving higher, especially with the confirmation here on the aileron. You did have this long consolidation zone that we always talk about, where the rubber band is stretched and then finally snaps, moves higher. Good chart here on Whirlpool. Inflation seems to be another topic that's getting more and more concerning. However, Federal Reserve does not seem to be too concerned about inflation. In fact, I think they'd rather let it run hot or hotter than not. Last time, I think inflation was around 1.6, 1.7% or so, but I think the Fed's target would be somewhere around 2.5 to 3%. Do have a question actually that coming in regarding inflation, and they're asking how are the inflation ETFs looking for purchase, such as WIP and TIP. We're going to take a look at those actually right now. But with the Federal Reserve wanting the inflation to run hot, this is a great way to protect your portfolio, because certainly money markets are not paying anything. We all know that. We tried to get to the point, I think, late last year, early this year, where we saw money market rates jump up to 1.5 to 2%, but now back to, I don't know, 10 basis points, 20 basis points if you're lucky. So there's still some online saving rates out there with American Express, maybe HSBC Direct, that you're getting maybe 1.25%, but difficult market, and money markets are certainly not going to protect you from any kind of inflation. However, tips have been on fire ever since, way back when. I think they're up almost 9% on the year to date, with dividends being reinvested. So long-term weekly chart looking pretty good here. Daily chart, we're starting to see some consolidation, but obviously you're still getting those interest payments, which are not factored in to a daily chart. So you kind of have to look at total return when it comes to tips, especially if you're reinvesting those dividends, or for a company or a mutual fund. If you're using a mutual fund, a lot of people like to use mutual funds for bonds, as we see a lot of these managers doing a better job on that side. PIMCO Real Return is one of these particular bonds or bond programs that or bond mutual funds that does a decent job of taking care of some of these tip products. Additionally, if you're not fully aware, traditional bonds do not do well in an inflation environment, as the price of those bonds tends to go lower as interest rates rise to keep up with that inflation amount. Another way to protect yourself is looking at hard goods, commodities, gold, silver, palladium, copper, platinum. If you guys don't know these symbols, if you take a look at some of these down here, I think I have them all listed. There we go. Gold, silver, kind of touch on these really quick. Gold's on a little bit of a downtrend on the daily, has good support here on a weekly chart down to 173.70 or so. So I'd watch for that as a bounce. I think there was a hole here that we dropped below these two big high volume nodes. So that's why we're seeing a little bit of downside here. May have some resolvement down here to maybe this 170, 173 level before the weekly chart brings in some support levels here. Silver, fairly similar. Downside support, but if inflation ticks up, watch for this one to continue to move higher. Copper, also an interesting play here for inflation protection, and platinum. Be careful with some of these smaller ETFs, these smaller commodity ETFs, as they don't trade quite as much. Gold and silver are pretty liquid, but I think these palladium positions, copper and platinum, have a little less trading volume than most of them. Palladium's got a nice little uptrend here on the weekly chart. Another way to protect yourself as far as inflation goes in the U.S. is taking a look at some international markets. A lot of times in an inflationary environment in the U.S., you're going to see a dollar devaluation, which makes international currencies much stronger. And when your money is invested in those international currencies, it will move higher. So you'll get the benefit of the potential company rise, as well as the benefit of the currency rise across the nation. So emerging markets, interesting play to take a look at. Emerging markets have been weak over the past 5-10 years as the U.S. market has totally dominated. And then EFA, not EAFA. Here's your international markets recovering slightly, but as we've seen lately, UK, France, a couple other countries are having another COVID outbreak, so they're going to struggle to continue forward. We talked about the dollar. Dollar's been on a large decline ever since the pandemic, trying to recover a little bit, but as we continue to spend trillions and trillions of dollars on stimulus or and then also inject currency from the Federal Reserve at low rates, our dollar is going to continue to devalue. But we'll still remain the reserve currency for now. I can't imagine anything else would take over that particular idea. Moving forward, there's been a lot of discussion. We only have a few minutes here, but I'll try and make it through. Been a lot of discussion of the breakup of big tech. Now, this hasn't really taken a big hit on either Facebook or Google, but those will probably be the two companies that will be impacted the most should the Democrats come into the office in November. Focus would be on cleaning up these companies and the fact that they're potential monopolies. But some other companies that may benefit from this would be companies like CRM, excellent company here for client resource management, and then Shopify, also another one that would benefit, as well as Square, who does merchant services. Square is a good company here that's breaking out quite nicely. Economics next week, we have inflation data, retail sales, and then the University of Michigan consumer confidence. This week, initial claims still remain elevated, so something to watch going forward. All right, guys, that's it. That's all we have for today, but have a good day and a good weekend. Take care.